Hi, I'm writing a check to my mortgage company. It's the last check, paying off the mortgage. This is a reenactment. I have done it in the past a couple times, not doing it today. But how did I pay off the mortgage in the past? Well, there's a couple different strategies I used, and I'm going to share them with you today. The best way to pay off a mortgage is to understand the anatomy of a mortgage and how it works. We're going to look at the basics today. To understand the anatomy of a mortgage, we should look at the numbers. And in this mortgage calculator, I just went to calculator.net and chose the mortgage calculator. It's a simple and easy one. So I'm going to start with $100,000, 30-year term, 7% mortgage. Bottom on here because it shows you what your payment would be, which includes property tax, home insurance, etc. But we're going to take that off to just see the actual heart of the mortgage, the anatomy of the mortgage, I'm calling it. As we come down here and look at the amortization schedule, we can see this is on monthly schedule. We can see that the payment is about $665, and the interest is $583, and the principal that you're knocking off is $82. And that's the key part to understand about the amortization of your mortgage, is that part of your payment is interest and part of it is principal. This is set. You have one payment for the life of the loan. So in this particular example, you're going to be paying $665.30 for as long as you have this loan. Regardless of how much additional principal you put down, if you put down a lot or a little, if you put down $10,000, it's still going to be that much the next month. But in this breakdown, you'll see that that changes dramatically. So that's what we're going to play with to see how we can lower the number of years and the lower of months to figure this out. I'm going to switch it back to annual because it's easy once we start doing that. In this one here, if we just add $200 a month to your payment each and every month, we calculate it, and you can see that we went from a 30-year loan, just doing that little one, down to a 17-year loan. If you probably pay $250, you may lower it down even to $15. Let's just see if that's for fun. And that's the fun part about this program. Change things as we go. And yes, going to $250, you lower it down to a 15-year loan or a little bit under that. One of the other basic ways I like to build equity in a home and pay off the mortgage earlier is to round up the mortgage payment. So if the mortgage payment is $2,200.50, I go and round it up to either $2,400 or $2,500 a month, make a nice square number. And the mortgage company does all that extra math to calculate how much more equity I'm building and how much less interest I need to pay them. So I like the freedom of doing a 30-year loan, even if you're going to pay it off early, because it gives you flexibility. You're adding $200 to the payment every month, but if things come up and you can't afford it, you can just pay the basic amount. Where if you change this to a 15-year loan, your payment's going to be over that $800, close to $900, but that's how much you have to pay every month. So if you have a bad situation come up and you need the extra cash, you can't reduce it. So that's one of the ways to pay off a mortgage much quicker. It gives you a lot more flexibility. It gives you flexibility to pay off the loan faster depending on how much extra money you got, etc. One other way is to make one extra yearly payment. So let's say you got a bonus check or something like that and you want to just throw a large amount in there and you wanted to do an extra yearly payment of $5,000 a year extra. That brings that 30-year loan down to 11 years. Now, don't get too excited because you got to remember this is on $100,000. And if you have a $200,000 loan, that one-time payment has to go up to $10,000. So everything has to be times whatever your actual loan is. There are some talks today with like velocity lending, how to get like a one-time bigger payment in there and to work with that. So if we're back down to the 30 years on this, and if we put a big one-time payment, just one time, $10,000, we can calculate and see what that does, is it knocks it down to a 23-year loan. So if you happen to have $10,000 in this scenario, it would knock 7 years off your loan period. And each and every month, remember in the beginning where it was like 80-something dollars, by doing that one $10,000 payment, now each and every month you can see how much more is being reduced. Even if that's the only thing you ever do, those numbers are quite a bit higher and you're gaining a lot more asset value or equity in the property as you go along, if you happen to have that large one-time payment. One of the things I did for fun when I was paying off my first one is the garage was full, and that was being very frustrating to me, so I was going to just give it all away or whatever. I said to go ahead and sell it and put the money towards the mortgage. So that's what I did. It ended up being about $500 back then. I used Craigslist, obviously they use Facebook Marketplace or whatever. And I put that into the loan to help pay it down, and it reduced the loan by that $500 as a one-time special payment. So then here's my thought. I sold the house and I took that all my equity and put it into my next house. So part of that equity I put down was that $500. Now it's still paying down again the next house because I didn't take that money out. I just put the equity from my first house into my second house and my second house into my third house. So that $500 I put back in there way back when is having still an asset value to my property. You think I'm thinking is right? You think I'm kind of goofy on that one? Why don't you go and put a comment if you think the math works out that way, if that original $500 is still earning me money by saving me on the amount of debt I have on my current house. Home ownership comes with many concerns. I am driven professionally to help home buyers, sellers, and investors get the best deal that they can. Check out these videos for more helpful information.